Hello guys, welcome back again to the channel. It's been a while guys, it's been a while since we last posted video in this channel. But yeah, we're back. It's been one thing after the other, but this time we are back. And we're not just back with anything, we are back with another powerful strategy that you guys can actually use to trade the financial market. And this time around, the good news is that this strategy we're about to show you guys, it's not just for boom and crash alone, but you can actually use it to trade all instruments. Now, what I mean is that you can use the same strategy I'm about to share with you guys to trade boom and crash. You can also use the same strategy to trade the forex market. You can also use the same strategy we're about to show you to trade cryptocurrency and even other indices. So it's like 10 in one strategy. Yeah, you can say that. So yeah, it's a powerful strategy we're about to show you guys. Just please listen and follow along as we share with you this powerful strategy to trade the financial market. This is Crash 500. Mind you, I'm using TradingView, tradingview.binary.com for those who actually don't know how to access it. So it's tradingview.binary.com. Now this is TradingView platform, and as you can see, this is Crash 500. I did drop analysis on my Telegram page of Crash 500 for a buy position. I think when price was around here, I did drop the analysis waiting for a pullback and sure. So if you follow the analysis I drop on my Telegram page, you do be smiling as well. Currently, we'll be looking to take profit at this very level. This you're expecting price to go to right now. Expect price to come to this level. That's what we're expecting. So, but okay, let me share it with you guys this strategy. This strategy is just we're just gonna be using only one indicator for this strategy. So let me add indicator now. Indicator we'll be using for this strategy is called the alligator Williams alligator. Now this is it guys. So this is the indicator we'll be using for this strategy. Now I want to explain to you how you can use this indicator to actually know the direction of the market. Now the Williams alligator, it consists of three different moving average. Meaning what mean these lines you see here are moving average. So it is the composition of three moving averages that forms the B. Williams alligator. With the help of this strategy, you can know when the market is consolidating and when the market is trending down and when the market is also trending up. Yeah, it's a powerful strategy. So just stay calm and follow us as we explain to you how you can use this one indicator, to trade the market. Okay, but mind you, we're not using the default settings. We are not using the default settings. So okay, so we're gonna change here to 8, and we're gonna change here to 8, and we change here to 18. So just length 18, teeth length 8, lips length 8, and yeah, we're good to go. We're good to go guys, we're good to go. Now that's all you have to do basically. Just let me show you the properties again for those. Now the just length is 18, teeth length 8, lips length 8, and then you press OK. Now mind you, these settings are naturally the same for those who will be using their mobile. For some period of time we'll be dropping strategy with our mobile phone, like a mobile strategy. But trust me, this one is for system, for those who are using their PC to trade. Yeah, this is for you. And after this video, depending on the comment, we can actually drop the mobile version of the strategy. So now, how can you use this indicator, the Beryllium indicator, to determine the trend of the market, to determine the direction of the market? It's easy. Let's go to a lower time frame, and, and let's see how this indicator looks like on the lower time frame. So here we are, guys. Okay, let me zoom out a bit so you guys can see better. uh, okay guys, so this is indicator here, and we actually on the lower time frame. I want to make it bigger so you guys can see very well. Now, one thing you should know, you can also use this indicator as a confluence for your technical analysis, Now, what we do is that whenever, please take note, whenever this green moving average, this green color moving average moves from the downside and crosses above the red and the blue lines of the alligator, it signifies an uptrend. Take note. Please, this is not the same with the crossover strategy. This is alligator. Though the alligator indicator are made up of different moving average, but it's totally different from the crossover strategy, meaning the parameters are different as well, and of course the indicator is also different. So now, for a buy position, all we just have to do is watch out for this green alligator line to cross it above the red and the blue alligator line to the upside. So once this green comes from the downside and intersect the blue and the red alligator line to the upside, it shows that it's an uptrend market. That is the condition for an uptrend market making use of this strategy. You get it? So now, whenever the crossover happens, whenever the green alligator line crosses above the blue and red alligator line, it shows that the market is an uptrend. If it does cross it in the 15 minutes, 30 minutes, whichever time frame you are using, yeah, it works on all time frame. Now, once there's a crossover here to the upside, it shows that okay, this market is going to go up. So we take our position. Once this green line crosses above the blue and red alligator line. Now, the next thing you're going to ask is, where is your stop loss going to be? Where are we going to put our stop loss when we take our buy position? That is a function of the blue alligator line. Whether we are buying or selling, the blue alligator line acts as an Excel level. Like, what I mean is stop loss. So the blue alligator line helps us to determine where our stop loss is going to be. So if we take our entry in here, our stop loss is going to be below the blue alligator line, a little below the blue alligator line. So if we take our entry here in this case, because there was a crossover here, there's a crossover here, the green alligator line crosses over the red and blue to the upside, signifying a buy position. So we take our buy here and set our stop loss a little below the blue. This is the blue here, a little below the blue alligator line. So we can set it here, and what happened, we see how the market kept going up, kept going up. Now, one way we can take our profit, one way we can take our profit is that whenever the market goes in our direction, for example, if we take our entry here and the market keep buying, now we wait for the candle to retrace back to the indicator, to the alligator, to the green and red alligator. So once we take our entry here and the market keeps going up to our direction, we place our stop loss. We move our stop loss from this position, which is below the blue alligator line, and break even, and break even. So once the market starts going in our favor, we are to move our stop loss from below the blue alligator line to break even, which means that even if the market should come back, we are not going to lose. We're only going to end up in small profit. Now, then next question that comes to mind: how do you equally take your profit when you are using this strategy? It's simple. Whenever the market goes in our favor, in our direction, we can use our red alligator line as take profit, so if we enter the market here, remember this 30 minutes time frame, and the market keep going in our position far away from the alligator line, showing that the alligator is going to the upside. Whenever there is a touch of this kind, we close our trade, we close our trade, we close our trade, and watch for how the market going to react to the blue line. And once we see there's another rejection from the blue line, we go long again. Now, same thing, see how the market kept pushing to the upside. Now, the same thing also happens here for a buy position. Here, we saw that the green alligator line crosses above the blue and the red alligator line. It shows that the buyers are still very much in control of this market, and so we go in for a buy here and place our stop loss a little below the blue alligator line, and watch as the market goes our way. So the market keeps going, break even, and once the market retraces back to this red alligator line and closes below it, we take our profit. So that is how to use this strategy for a buy. It works also for boom. This just crashed 500. Change. Let's move down to boom 500 or 1000. Let's go to boom 500 and see. Boom 500. Okay guys, so this is boom 500 guys. This is boom 500, currently an uptrend. Okay, we've seen a lot of say. Okay, we can start from here. There has been a lot of sell condition. Now, as we can see on boom 500, same 30 minutes time frame. Now we notice here, look at what the market was doing here. Here it shows that the market is actually consolidating, because we notice that the alligator was moving up, then up, down, up, down. It shows the alligator was sleeping here. So here, with the help of the alligator, we were able to detect that the market is actually consolidating, or rather in a range. Now, but notice what the alligator did here. we saw the movement here to the downside, and the alligator helps us to know that the market has not changed direction to the downside. How? Look at the red alligator line. It was initially, let me remove this. It was initially below, but notice how it came and crosses over. Notice how it came. Here it is. Notice how it came and crosses over to the upside. So when the red alligator line crosses above the blue and the green alligator line, it signals a sell position. Remember, our focus is only to sell boom and to buy crash. Basically, that is, if you have been following me, you notice that is what I usually do most. Buy crash, sell boom. Now, once the red alligator line moves to the upside above the green alligator line, it shows that the market is going to sell. So we option in for a sell at this very point. We option in for a sell and place our stop loss, like I said, a little above this blue alligator line. So the blue alligator line helps us to determine our stop loss, whether we are buying or selling. It helps to determine the stop loss. And the green helps us to determine our buy position, while the red helps us to determine our selling position, our selling entry rather. So as in this case here, we take our sell because the red alligator line was above the green. So we take our sell and place our stop loss just a little above the blue alligator line. And what happened? We saw how the market kept falling down. It kept going down. And like I said, once we are in good profit, what we do is move this stop loss from here and place it, if we are selling, a little below our take profit, and if we are buying above, sorry, a little below our entry, and if we are buying a little above our entry. So you saw what happened, the market kept going, and we would have taken our profit here because the candle crosses the green and it went touching the red. So we take our profit here. And notice what happened, the market was a kind of consolidating, came back to here, and we saw another setup here again, where the red alligator line crosses to the upside, crosses to the upside. So we would have taken another entry here, under entry here, and place our stop loss a little above this blue alligator line. And what happened again? We saw how price kept on crashing, crashed to the downside. And again, we would have taken our profit here because this candle closes above the red alligator line. So it would have been a TP for us here. And watch what happens again here. It gives another sell signal. So that is just practically how you can trade the market, making use of this simple strategy. This was a buy. There was a buy position here. Sorry. This is for buy, and this is actually for sell. This is for sell. Look at it. Buy condition, sell condition, buy condition, sell condition. The red above the green enter, then the blue also above the two. Now here is going to be our stop loss. We take our sell position, and what happened? The market kept going down. So this is a simple strategy that you can actually use to trade the financial market. And notice what happened here, guys. Notice what happened. This was a buy condition for boom 500. We would have placed our stop loss here. here, would have placed our stop loss a little below the blue and going for a buy. And what happened? Market kept going up. And here another condition was made to here and here as well. So this is just a simple way, guys, to trade the financial market making use of the B. Williams Alligator indicator. It's simple, guys, it's simple. So this is just practically how you can trade the market using this indicator. Just follow the conditions. You can use this strategy as a confluence, an additional confluence, probably for your technical analysis. Like you see on Crash 500, I did my technical analysis and then I applied the alligator, the Williams alligator indicator, and it corresponds with my technical analysis. So it shows that for that trade, I have two conflicts, two reasons why I should take a buy position. Telling you that just enter buy market whenever you see this. No, you can use it as an additional confluence for your trade entry. Now, if you want us to do the mobile version of this B. Williams alligator strategy, you want us to release another video on how you can use it to trade with your mobile devices, kindly let us know in the comment section. And we also appreciate you guys if you hit on that subscribe button. So if you've not subscribed, kindly hit on the subscription button and do well to give the video a thumbs up. It's your boy Stevino and I'll be signing us right now. Peace, guys.